Here's what happens when the dumb money starts selling. Hi, this is Charlie giving you Friday's video. I thought I'd start using the camcorder a bit more, just so you've got another visual perspective while I'm sat here. And you can see I've got a cap on today. So that's just the way I roll. Okay, so the dumb money. The dumb money is an affectionate term for you sort of retail traders. You retail traders who are new to the market. So they are less sophisticated in that they don't have as much knowledge. They're not really dumb. It's just an expression. So what we found is that if you look at the S&P chart here, that in recent months and during this period here in if I can get the pen up, is that working? Yeah. During this period here in late Feb and throughout March and into April, what actually happened is in the US, lots of people, like here in the UK and other countries around the world, were furloughed or made redundant. So they were sitting at home. Many people being paid to sit at home whilst they weren't allowed, while they're in lockdown. And you imagine there's no sports on the TV, so there's nothing to bet on, to gamble on. And so those people who would traditionally be betting maybe on outcome of sporting events couldn't really do that so much anymore. And so what they've done is they've come back to the old baby, which is the stock market. People are sitting at home. I know what I'll do. I'll open up a Robinhood account. So it's quite a big thing over in the US because it's zero commission trading over there on these Robinhood type accounts when you're trading stocks and the likes and ETFs. And so there've been a massive surge in the amounts of accounts that have been opened back in March, April, maybe even late Feb, from people sitting at home saying, I can't do anything else, I'm going to trade the stock market. Because it's a different psychology in the US to here in the UK and maybe across Europe and elsewhere, and that it's in their sort of DNA that they love knowing what's going on in the stock market. If any of you have ever travelled to the States and you put the TV on in your hotel room, it doesn't matter what the TV program is. There's always like a ticker tape down the bottom telling you what the S&P and the Dow are doing. So they have that in their DNA. It's very different over there, and because people are expected to manage their own money a lot more, so they're all more geared up to keeping an eye on what the markets are doing. So we know that there's been a surge in new entrants into the market saying, okay, I've got some money, I'm going to chuck it into an account and I want to trade the markets. And what's actually happened is that a lot of that money actually, a lot of the money was short, as you can imagine, right down here near the lows. So a lot of people obviously got caught down there. But they also did start getting long through here, and we saw that there was a huge amount of call buying, certainly once we got into late April and into May, where if I use the expression mum and pup trader, but it's not actually mum and pup trader. You've got a load of youngsters getting into this as well who might have otherwise been, like I said, doing sports betting and the likes. So huge amount of call buying, really, really huge amount of call buying. But this is obviously in that retail space, and they've obviously done quite well. But what's interesting, and they're buying ETFs as well because that's what they can do via these trading accounts, these zero commission trading accounts. But interestingly, what's just happened? We just had this huge down day yesterday in the stock markets, and immediately they've all, I say all, but a large percentage of them have flipped. They flipped from being long the stock market to very quickly yesterday and even into today have flipped over and switched to buying short based exchange traded funds. Exchange traded funds which will make them money if the stock market continues to go down. So what's interesting is, and we don't have a lot of data on this because these types of accounts haven't been around very long, but what's interesting so far, and it makes sense, that when you have a fast switch, so what we had there yesterday was that following any day like yesterday, with at least a 10% more growth in short bets versus long bets, so people switching over and a massive increase in the growth, greater than 10% growth in people piling into short positions, what actually happens next? you can pretty much guess. Now, don't get me wrong; I don't have a huge amount of data here, and it's only going back a couple of years. But what we do see is returns are actually positive. So that's quite interesting. So if you take that as a data point, then saying, okay, loads of people have switched to getting short, yesterday and into today. Um, are they? Are we now about to see the stock market just gradually start to work its way up? It doesn't mean to say it's going to go up straight away. And I know that on my chart here, the S&P's, the futures here are having a bounce day so far, but the stock market, I'm recording this and it's just gone 2:30. So the market has literally just opened. If I take this down to a 5-minute chart, you'll see a little bit of movement, no doubt. There we go, up here. That's the 5-minute chart. Going to move around? No, yeah, there you go. No, nothing too major at the moment. So it doesn't mean to say that the stock market has to immediately go up the following day following that type of speculative behavior. But generally speaking, 2 to 3 months down the line, it's pretty much always positive, which sort of makes sense when investors get very quickly negative, then the market then goes up. The only thing that I must put a caveat in here is that we have had all of these people in the options markets who have been net long, so to speak, buying all these call options. And have they all been cleared out yet? So there's still, the jury's out that the market still could come down a little bit in the short term, but this could just be a bit of a shock. And actually, based on that information, at least anyway, amongst those types of that part of the trading community, you would normally take that as being a bullish sign, especially over once you get 2 to 3 months out. But we also do know that the market had got very frothy. Lots of other investors buying call options. That gives us other information which tells us that for the next 2 to 3 months, the market might struggle. So we have got this dichotomy here where we've got one set of traders, retail traders, who have been buying call options, expecting the markets to still go higher, and then you've got these others who have switched very quickly in their ETFs and to going sort of net short, and that can mean that the market could go up. So we've got to take that balance there. And what does it mean? Well, I guess it means the market could go up or it could go down, couldn't it? Not a bad call there, Charlie. Yeah, sit on the fence, why don't you? But we've got this information. I just think it's interesting information. What do I actually think about the stock market? For me personally, I believe that we have what the stock market is doing versus what the actual economies around the world are doing. And so I think there's been a bit of a disconnect between the two, and we don't know what is going to happen yet within the economies. So I think the stock markets have had a great run, and it wouldn't surprise me if overall they end up going a bit range bound. Could pull back a little bit more there. If you look at the chart there, we've got a 50-day moving average, which is my black moving average here. It could easily pull back to that in the coming days. That would be a normal retracement. But generally speaking, I wouldn't surprise me. We're going into the summer as well, that maybe it starts to find a range. And so I think that's important to note, that might be what we get. I'm not all out bearish, although of course you never know, because who knows how the economies in several months time are going to be looking, so I'm not all out bearish, especially when retail are starting to get like that so quickly as well. And that's always a concern. If you were on the short side, that would concern me if too much of the retail market was starting to sell. If the retail market was still buying, then I'd be like, great, I'm all over this. I'll carry on holding on to my short positions. So there you go. That's my video for today. Just a little bit of food for thought at the end of the week. Something a bit different, rather than me doing something on mindset, psychology, or telling you a story. One thing I do know, though, is this whole sort of volatility and movement that we've been having in recent months, whether it's things like the stock markets or Bitcoin or Forex, it's not going away, and I think this is a wonderful time to be trading. It's been when we went, if we go back to sort of even to January of this year, and then back into 2019 and 18, the markets have been low volatility, whether it's in the forex markets or the stock markets, because the stock markets have been trundling their way higher, and so that overspills into other markets. And I don't think this volatility. I'm not talking about the volatility we necessarily had in March or even what we had yesterday with the big moves there, but I don't necessarily think that we're going to have that all of the time. But generally, an elevated amount of volatility relative to what we had last year and the year before, and that's great for short-term trading. So for me, it's lovely to see the moves. I'm not in all of these moves all of the time, and you don't have to be, but it's still lovely to see because you'll catch some of the moves, and that's all we need as traders. Anyway, there you go. This Friday's video. I better shut up and let you go. Enjoy your weekends. I'll be back in touch next week.